what do you think have been the actual impacts on economic data?
If Trump just changes his mind tomorrow morning, we will have again a shakedown in the market.
About tariffs, give us a lowdown.
We've seen recently what happened with China, where we had the 90-day deal to lower tariffs.
Do you think that after these 90 days we'll have a permanent deal, or do you think there's going to be another double down?
How do we compete with that labor costs? The answer is robotics. So how are you creating jobs?
Yes,
right?
exactly. Yeah.
So is it even feasible to do that?
What do you think is next? Like in general?
The differences between manufacturing wages in the States and China. In 2024, in the States, it was $28.22 per hour. Can you guess how much it was for the Chinese workers?
Hello traders and welcome to this podcast from Exness. Last time in the series we were discussing what's next for crypto in 2025, and now this time we're going to be talking about Trump's tariffs and markets. If you haven't done so already, please do subscribe and turn on notifications so that you'll always be aware when the next podcast in this series has just been released. I'm Michael Stark, Financial Content Leader, and here with me today is Antreas Themistokleous, Trading Content Specialist. Welcome, Andreas. Thanks for being here.
Hello, Michael, and thank you for inviting me.
So, about tariffs, give us a lowdown. What is the purpose of the tariffs? What are some of the key developments in your view over the last couple of months that have really shaped this narrative around tariffs? What do you think is the most important things that markets are focused on?
Main point of the tariffs might be to create more jobs locally. For example, what the Trump administration was mentioning is how they want to bring manufacturing jobs back to the States. And that might have a point, but overall, I don't think it is feasible to begin with.
Yeah, it makes sense.
Yeah, and also it tends to give the US leverage over trading negotiations. And we've seen recently what happened with China, where we had the 90-day deal to lower tariffs from 145%, which is outrageous, down to 30% for US and then 10% for China.
Yeah, no, that makes some sense. But I think also it's not necessarily just to do with trade, because the difference between the outcome of the agreement between the USA and China with the 90-day pause, theoretically, is to emphasize fentanyl and how the Chinese government, according to the USA, needs to do something to try to crack down on smuggling and on production, possibly even of fentanyl. And also this was referenced when we had the initial round of tariffs against Canada and Mexico. So, I mean, it's kind of multifaceted in some sense. Yeah, that's true. And what about apart from China? Let's briefly just discuss how have tariffs affected the other countries that have been levied on.
So we all saw the famous list of tariffs that the US published, right? Every single country, almost every single country is there, apart Russia, by the way. But we've seen retaliatory action from traditional trading allies of the US, like Europe, for example, Canada and Mexico, China eventually. So it all caused all this uncertainty in the market that had an impact on different sectors for gold, crude oil, even the Fed probabilities, shifted. So yeah, it had a general impact on the markets.
Yeah. I mean, and specifically that's kind of disparate because what I would highlight, one of the things that I would highlight anyway, is how certain countries where the USA traditionally, most of the time, has a good trade surplus, such as Britain, for example, would just had the flat 10% tariff and now have reached a not totally comprehensive, but more or less comprehensive deal. Because there's a relatively minimal amount of tariffs, and also because politically you can see that the British government is really desperate to work with Donald Trump to try to not escalate, not increase tension, nothing like that, just try to play ball, and that seems to have worked really well. But then, of course, for some other countries, maybe that's not going to work quite as well, because, of course, there might be quite a big trade deficit between the USA and China. So what do you think about that? What do you think are some of the the countries or the currencies, financial instruments in general, which have been worst hit and do you think might continue or might start to recover? What do you think are some of the upcoming movements? And how do you think they might be different from what's been happening in the past?
So yeah, definitely the US dollar has been impacted because it's the main player in the major forex markets, and also we've seen some shifts in the Japanese yen as well as the euro. So that's the uncertainty that was created, and I personally believe that Trump counted on to play out the whole tariffs issue around the globe, because you cannot just go against your traditional trading allies, for example, Europe and China for the US. So
yeah, let's pick up on that. But I mean, just very quickly, or to stress for our viewers that specifically when we're talking about the effects on different markets, that's something you could read more about in a lot of detail in the article that's linked in the description. So if you'd like to know more about that, just please read the article in the description. And yes, back to what you were saying, Andreas. Sorry, manufacturing jobs.
Yeah, well, I wanted to quote here. I was watching the interview of the Secretary of Commerce, Mr. Howard Lutnick, on March 6th, which is quite recently, on CNBC. And he was commenting on the differences between the average wages of manufacturing wages in the States and China. In the States, in 2024, according to the U.S. Bureau of Labor Statistics, it was $28.22 per hour. Can you guess how much it was for the Chinese workers?
Half that?
Half. It was 6.65. So right off the bat, you have 4 times more labor costs in the States than China, right? And also, how did he respond to that? He said, how do we compete with that labor costs? The answer is robotics.
Yes.
So the main issue here is to bring back manufacturing, to create manufacturing jobs. But then you have the Secretary of Commerce stating that we can fight these labor costs with robots. So how are you creating jobs?
Yes,
right?
exactly. Yeah.
So is it even feasible to do that? I mean, even if you manage to bring back the manufacturing factories to the States, right, you still need to import the raw materials.
Yeah, that's right. And I think that there's 2 points at issue there, right? I mean, China also needs to import from other countries. Exactly. You know, raw materials, they come from various other countries, so that it has these knock-on effects. And I think the other key point is you would find that I think a lot of Americans who don't work in manufacturing anymore, they probably don't want to go back to working in manufacturing.
Yes, exactly.
So it's something that's kind of political pie in the sky, but the reality of bringing back manufacturing is not going to work. So, okay, that's kind of seems to be kind of unrealistic, significantly affecting manufacturing jobs. But what do you think have been the actual impacts on economic data? Because I remember before the American election last year, everybody was talking about tariffs, and if they are actually these huge tariffs on China, that's going to have a big impact on inflation. Do you think that we've seen that? Yeah. Or do you think we've seen something else, some other actual impact from tariffs on economic data?
So according to US inflation data, the latest that we have on April, it came out at 2.3% and it was expected to come out at 2.4%. So we see inflation came down in April, but tariffs started imposing in April, early April, but I don't think they are in full effect just yet, because they imposed the tariffs and then every single country wanted to discuss with Trump to cut a deal.
It's a bit early to tell, you know. Yes. I mean, like, it is something that's going to affect over the course of several months, definitely. Right, so one chart that I do definitely want to look at is the S&P 500, because we can see that that's one of the main instruments that really pushed quite strongly down when we had Liberation Day, inverted commas, and now has recovered actually pretty strongly. So what do you think is next? Like, in general, what do you think is next, Andreas? When do you think that after these 90 days we'll have a permanent deal, or do you think there's going to be another double down? What do you think is going to happen next?
Yeah, so I do believe that global trade in general does rely heavily in the relations between the US and China, right? US is like the world's biggest consumer and China is the world's biggest manufacturer. So you need these two players to have global trade, right? So I do believe that if everything goes smoothly, we will have an extension or probably, a final resort, that these tariffs will be permanent or whatever. But I do believe we will get an extension. Now, if Trump just changes his mind tomorrow morning, for example, and just cuts everything down, and we are back to square one, tariffs go to 145% again, or some ridiculous amounts, we will have again a shakedown in the markets. So we might see the indexes like the S&P 500, Trump, correcting to the downside, as we've seen in the early 2025, and probably some other instruments as well, like gold and crude oil getting affected by that. But personally, I do believe we might get an extension.
Yeah, makes sense. So lots of different possibilities depending on what happens. Okay, so thanks, Andreas, for being here.
Thank you very much.
Thanks for giving your perspectives.
Yeah.
And thanks also to our viewers. And please join us again for the next video in this series. Remember, if you didn't do so already, subscribe, turn on notifications to be aware immediately as soon as the next video is uploaded.